Okay, I'm recording this on Sunday the 14th of April for trading on Monday the 15th of April. I'm just going to quickly show you a chart of Bitcoin. I haven't traded it for a long time, but it's quite interesting how this bounced from the 200-week moving average. I gave up on a long position here in the end because we just went sideways for so long, and I wish I hadn't now because, of course, we rocketed last week, and this week we topped out exactly at this trend line. Quite interesting. Just joining the lows of 2018 gave us a really nice trend line. Once we'd broken that trend line, we collapsed. So, you know, it's obviously a significant trend line. And look how the peak of last week was 54.66. I've got the trend line exactly at 54.67. Anyway, bang on, almost to the absolute last pip. So it looks like Bitcoin's turned. When we have a look at, hold on. The daily chart doesn't really give us any extra information, but you can see how we rejected the trend line and we've turned lower. The 1 hour chart is possibly quite interesting if you're looking to trade Bitcoin. Maybe this is a head and shoulders pattern, so it would be interesting if this was a head and shoulders pattern at that trend line resistance. The 100-hour moving average is crossing back below the 200-hour moving average, and of course the price is hovering below both of those moving averages. Just checking the 4-hour chart, no, there's nothing on there. So in theory, if this is a head and shoulders pattern, then a break below 49.50 would be our sell signal, having already rejected that trend line. Quite interesting. It's a good technical market, Bitcoin. It always has been. Wondering if the US dollar is going to start heading lower. The Aussie versus the US dollar broke a little bit higher and topped exactly at the 200-day moving average. Okay, so nothing else matters this week for the Aussie dollar except nothing matters but the 200-day moving average, which is 71.95. Looking at the short-term charts, the 4-hour chart has got a negative candle on it, and the 1-hour chart has got this negative candle. They've both got something similar, the spike up, the lower close, the engulfing candle. So it would suggest that maybe we will pull back in the Aussie dollar. Where could we pull back to? We could pull back as far as 71.45, 71.35. I'd probably be buying it down there. I'll have a look more carefully at this and put it on a report, but for sure we've got support down as well. 71.50, 71.40. Let's call it this little band in between here. Open this chart up a bit. On the downside, 71.40, 71.50, 71.40. Below 71.30 is going to pretty much mean the bulls have lost any chance of breaking higher. Obviously, a break up through 7200 will be bullish longer term. Looks like we could quickly go to 72.95, and what are the peaks up here? If I can find them, 73.90. So we could really see 100, 200 pip rally quite quickly. That would be exciting. I'm desperate to find a trade to jump onto, and that, yeah, there's nothing in the way. So watch that carefully. Watch for the break above 7,200. New Zealand dollar is less exciting. I've had to redraw my trend line here. I did have it from the middle of January, but it wasn't working. So I've taken it from the low in February, and we have just touched that. So 70, 67, 80, 85, but I would need to see this really above 68.15 before I could get bullish about this. It's just a big sideways market. Not exciting. I'm going to leave it. Dollar yen, good recovery last week. So we reached a peak of 112.09. Not far, just 3 pips below the previous high, which was in March. Close to the Bollinger Band. But definitely this trend line is the most important thing, and you can see we just touched that trend line. Where is it? It's around 112.10. So we didn't break it. We've got possibly negatively diverging stochastics. We've got the 200-week moving average, which has now dipped a little, and we've held that. And on the 1-hour chart, we've got a negative candle here, the engulfing negative candle, the last candle of the day on the hourly chart. So the question is, well, there's no doubt the biggest level of the week is exactly where we are, 112.10. We're going to have to break up through 112.25 for this to look bullish and for the rally to continue. Now, if we don't, we've got a double top at various resistance levels, as I've shown you, and this should lead to quite a significant sell-off. So it is worth a short position. You know, you're risking 15, 20 pips maybe, and if it works, you're looking at significantly more than that. The first stop would be the 200-day moving average at 111.50. So you've got a good 50-60 pips on the downside straight off the bat, and probably a lot more than that. And if we start breaking above 112.25, well, reverse into a long, because then we've got some good upside potential. So it's pivotal, shall I say, that 112.10 level. Euro US dollar. Right, I talked last week about how the Euro US dollar might just have a double bottom, as you can see on the weekly chart. Could be interesting. What else gives us bullish ideas on this chart? Right, we're not massively overbought yet. There's nothing else on the daily chart. There's nothing. It's just confusing sideways rubbish. So I have to go to the hourly chart, 4-hour chart, for some encouragement. Trend line going back to beginning of February, we've broken above that. Now remember, this was a fantastic level, that 112.80, 112.90. We were shorting that all through most of last week, and it was really giving us some easy money. And I did say a break above that would be bullish. We broke above it on Friday. Let me open this chart out a bit now. So this is where it starts to get interesting. 100-hour moving average crossing over the 200-hour moving average. Okay, that's bullish. The price has already crossed above the 100 and 200-hour moving averages and is holding above it. So they're being used as support. So that's bullish. Now we're through the 500-hour moving average, which is the green line. And that's also, the price is also holding nicely above it after the break, as you can see here. Dip down to 112.80. And the 100-hour is about to cross above the 500-hour moving average. So all these moving average crossovers, price crossovers, are all bullish. Now we're starting to hold above this trend line of the channel, going back a couple of weeks. Starting to look bullish in the short term. I think this is worth buying in the hope that we actually start getting a trend to follow. Now I can show, for the 4-hour chart, I'm not going to bother to show you, just take my word for it. We're holding above the 200 period moving average on the 4-hour chart, and we're well above the 100 period average on the 4-hour chart. I'm starting to get bullish. I think it's worth a punt. If you can get in around sort of 113.00, 112.90, ideally you need to stop below 112.50. That really would give you a lot of room. You could even start nibbling, you know, buy a little bit, and if it comes down to 112.75, you could buy a bit more, and you could buy a bit more at 112.50, and then you're out below 112.50. Just a suggestion if you want to scale in. You know, I don't trust short-term charts as well as I trust the long-term charts, but I've got it in my head about this double bottom. I'm searching for a trend because I'm desperate to find a trend to jump onto, and I think, you know, sooner or later we've got to break out of this blooming sideways boring trend, and when we do, we should get one heck of a rally. And this is another thing I'm thinking about. It would be just typical of the market to break and run in the week running up to Easter when no one's paying attention. All the big boys are probably skiing in Europe, and you get something and everyone misses the move, and then you just everyone comes back after Easter and has to chase the move. It would just be kind of typical. Anyway, the next challenge will be 113.50, 113.60. That's here on the daily chart. Break up through there, and you want to be adding to longs really. We should shoot up very quickly to 114.48. Yeah, that ties in perfectly. That March high ties in perfectly with the 200-day moving average. So let's see if my theory is right. If you fancy a gamble, that one definitely is worth going for. Gold, I don't have a lot to add to what I've been saying recently. 100-day moving average support 1287, trend line 1284, break below 1280, which was the previous low, is going to be negative. Then we watch the 500-day moving average at 1274, break below there. We really want to add to shorts because we would be looking at 1240, 1250, 1249. If we hold 1287, 1284, we're going back to 1300, 1303. And then above there we've got 1307 and this trend line 1309, which held almost perfectly on the last test last week. So clearly a break above 1310. What was the peak here? 1310.50. Call it 1311 would be a nice buy signal. So at the moment we're kind of in no man's land, trading between support and resistance. And you want to be ready to trade a break of either the resistance up there or the support at the low 1280 area. I wonder if this downward sloping channel is the start of the new trend. Don't know. We'll have to just see whether we break the support to confirm that. The silver chart is also testing less important support, but the trend line certainly seems to be holding. This trend line goes back to October, holding perfectly. We've spiked down there, big long lower wicks on these candles, so someone's buying it down there, that's for sure. And on Friday they were buying it as well, but that rally couldn't be sustained. This resistance level working perfectly around the 15, 20, 25 area. So if we break below 1490, that's your sell signal, which would help if it was supported by a break below 1280 in gold. That would just tie in nicely. Aussie versus New Zealand dollar, that lovely rally that I hope most of you managed to catch. Negative candle on Thursday, but positive candle on Friday. Well, I say positive. We hit a new high of 106.25, so we've tried to break above the 38.2% fib at 106.17. We didn't quite make it. We've pulled back to 106.00. You want to be out of your longs, as I said to you on Thursday. Get out of the longs. It's been a good run. I wouldn't be short here. It's just not strong enough resistance. But bearing in mind how overbought we are, you definitely don't want to be long anymore. Let's see if we pull back. If you want to try a short, I mean, overbought. 38.2% fib resistance. It's a weak argument for a short, but if you fancy it, we could dip to 105.00. There might be 100 pips in it. I'm personally not going to do the trade. I think it's too risky. Even the S&P, I talked about that 28.96.99 resistance level, which worked so well for many days last week, but we broke higher on Friday, so I said a break above 29.05 was bullish. Get out of any shorts. We've traded up to 29.14. So all that matters now is, let me show you the weekly chart, the previous high at 29.44. If we get up there and fail, there is a trend line as well. Trend line going back to, where are we? There we go, end of 2016. So it's a good 2.5 year, nearly 2.5 year trend line at, you can see by the time we get there, if we get there, 29.40, 29.45. That trend line will also be acting as resistance as well as the previous high. That would be one heck of a double top. Got to be worth the punt, hasn't it? Because just the downside potential is enormous. If it works, it's got to be worth risking 10, 15, 20 points to make hundreds of points if this market crashes. That's all I can say on that. Okay, good luck. It'll probably be a quiet week in the lead up to Easter. But as I say, sometimes these kind of weeks with a thin volume, you get some really squeezy moves on thin volumes. So just be careful of that. It could work for you if we do get some breakouts and the beginning of some trends.